Hello, everybody, and welcome. At the beginning of August, Ceragon Networks, stock ticker CRNT, reported their quarter two 2025 earnings. This caused the stock to trade down about 15-20% since the report. Today, I'm going to show you why the misinterpretation of this data is creating a massive opportunity that most investors will miss out on. Before we get started, if you could please go down below, hit the like and subscribe button for me. Definitely make sure you leave a comment telling me how I can improve these videos. Please remember, I am not a financial advisor and this is not financial advice. Ceragon Networks provides wireless backhaul and front haul solutions that enable cellular operators and other wireless service providers. In addition to that, they've also made a couple acquisitions lately to expand the business. We'll talk about that a little bit later. I feel like a good place to start would be to just review the last couple quarters and see why we've had such a massive drop in the stock price. The past two quarters, obviously, as you see here on Qualtrim, they've had decreases in their revenue, also in their income, profitability, earnings per share, about every metric except for free cash flow. Despite this recent financial performance, I still believe that this is a very lucrative opportunity. So let's go over all the details. So as I said before, their core business is effectively providing wireless transport solutions, specifically microwave and millimeter wave backhaul radios for mobile network operators. This hardware is the foundation of the business. The two most recent acquisitions are End-to-End Technologies and Ciclu. These two acquisitions both help transform the company from a hardware provider to a business model with high margin recurring revenue, and it moves their business from a inconsistent market in India to the North American market, which is a much greater opportunity for them. So to touch on a couple points from my SWOT analysis, they have a very strong product pipeline. They are profitable with strong cash flow despite the recent quarter's performance. The CEO is making strategic targeted acquisitions like we just went over, and both a positive and a negative. A majority of the business sales are in India. While this is a massive growth opportunity, the region has proven inconsistent and unreliable. With a company this small, there's always potential for further dilution. Next up, let's talk a little bit about the opportunities. The shift toward high margin recurring revenue streams is going to transform the business if they are able to execute successfully. Another opportunity would be to continue to penetrate the North American market. If they can acquire a larger market share, that'll be fantastic for them. And the general 5G infrastructure development in NA with the BEAD program and the general growth opportunity of India are both potential opportunities. And threats would primarily be larger players in the space like Nokia and Ericsson. Overall, what brought me to dig into this company a bit more, I very much am drawn toward the opportunity that North America provides for the company. I believe their acquisition of end-to-end and their move into private networks is going to prove to be very lucrative for the company. Their new technology, including the IP50EXP, which is a millimeter wave product, is almost custom built for the market, and I believe it will help them to naturally grow a much larger market share. Additionally, the extremely low valuation of this company, it currently trades at, when I wrote this, it was at a zero point 0.5. It's now at a 0.45 price to sales ratio, making it both a value play and a hyper growth stock given its small market cap. So next, let's talk timing. As a long-term investor, I generally advise against attempting to time the market. However, in this case, there are several events which are falling perfectly into place, providing very significant potential returns in the upcoming quarters and in the long term. So in the quarterly report, the CEO explicitly mentioned that the significant revenue decline in this most recent quarter was primarily due to the well-known financial issues of a single customer. This means that there is not a systemic failure of demand. This suggests that the disappointing Q2 results may be temporary rather than a long-term trend. And I'm of the personal opinion that the entry and expansion of their business into the North American market is such a large opportunity that if this order is never placed, the company is still in a good spot. And it's still a very fantastic company to buy today. So given all of this information, this paints the following picture. The company just launched a product which is effectively custom built for the needs of the industry right at a time where they're coming off of a very weak quarter and the stock price has dropped about 20%. The North American BEAD program was recently restructured in the US. This is requiring states to resubmit their proposals with a deadline of September 2025, and funds will be dispersed later in the year. So given all of this, here's how I see the company's future playing out over the next couple quarters and 2026. I see the IP50 EXP significantly ramping up in sales and contributing to revenue. And this is all happening right as the BEAD funds should be flowing to the states, which will then be given to the company to upgrade the infrastructure we have in rural areas in North America. There's also the additional possibility that the delayed order does materialize in a future quarter, providing to a massive surprise beat. This all provides the opportunity for very powerful sequential and year-over-year comparisons. Ultimately, I believe this is a perfect setup for a powerful turnaround in the second half of the year with significant growth continuing through 2026, with all of it being tied up perfectly by the materialization of their long-term strategy of transitioning to high-margin recurring revenue streams, thanks to the contributions from end-to-end and Ciclu. Now that we have the story, let's go over a projection that I made again. Please do remember this is a company with a market cap of 172 million. So don't risk the whole farm. I'm personally treating it as a speculative play, but here's what I believe the share price could get to. Like I had mentioned, the current price to sales ratio is about a 0.45. The industry average is a 2 to a 5 price to sales. If we get a re-rating of the stock that leads to either of these, with a 2 price to sales and the projected revenue of 500 million by the end of 2026, that would give us a share price of $12.50, which from the current share price of about $2 is a 600% return. And if we do get all the way up to a 5x due to a massive surprise beat or management sandbagging the projection, the 5 price to sales at again a revenue of 500 million by the end of 2026 would place the stock at $31.25, which is about a 15x return. Due to all the reasons that I have listed, I personally am of the belief that this is a very lucrative opportunity. as despite its size, the company is already profitable and has a very long runway for growth. That's all we have for today. I hope you enjoyed. Before we go, if you would like access to these slide documents, I have one for each of my positions and every company that I'm doing research on. Please do click the link down below to visit my Patreon. There I will give you full access to the updated slides of all of the companies at any given time. That's going to be all for today. I hope you have a good rest of your day. Thanks for watching.